How to avoid capital gains tax when selling an investment property. Now, this is very obvious to many people, but a lot of you have never even bought, much less sold, an investment property. So let's talk about a few things. What are the top tax strategies that real estate investors use? What's a 1031 exchange and how do you make that work for you? And lastly, when just selling it might make sense. Given all the new Big Beautiful Bill that just was passed July 4th, which is now the Big Beautiful Law, there's bonus depreciation, there's cost segregation, there's all sorts of stuff. So get a pen and paper. We have a lot to talk about. So first of all, let's just talk about some strategies that are used in general. Tax strategies are typically through corporate structure. So the first thing is your property held in corporate structure where you're doing a lot of deductions against it? I don't know how many people join our community and they own a lot of investment property in their own name, or they own a piece of property in Florida, but they live in Tennessee and they have it in a Tennessee LLC. You should have it in a Florida LLC. So the structure is, in our opinion, one of the number one things that how you bring the property in, because then you can employ your kids, you can write off your phone, you can write off the travel to the property, you can write off your vehicle. So there's just a lot of deductions when you do it that way. Many of you have a second home, a third home. Well, we have homes in multiple states. That sounds sexy, right? To the keep up with the Joneses people, but we're not those people. We're the wealth building people. We're the millionaire maker people, right? Lifestyle comes way down the line. Asset management and low taxes comes first. So structure is vital and number one. Number two, let's talk about the 1031. 1031, I'm actually giving you the written legal definition of what that is. To avoid and defer capital gains through a 1031 exchange, you roll profits into another like-kind property. Now, like-kind has expanded its reach. So find a good 1031 agency. I've used Sterling Trust in the past. I've used several trust companies. So shop around a little bit and see what the 1031 rules are. Some of the trust companies you're going to find have way more breadth. I've seen people take apartments and go buy land. Like-kind, I've seen land into animals. Believe it or not, you can buy cattle, you can buy racehorses. So it depends on the trust company and what their rules are of engagement for what you can do. And again, there's so much variance in that. You'll be surprised when you dig in. You can also reduce your gains through depreciation. Opportunity zones, it was a big thing. For some people, that's what they focus on. It's still a thing. And then converting your primary residence, again, into an LLC under very certain conditions. Like my property is held into an estate entity just for many, many reasons. Again, you've got to have good tax teams is what we have. So at Integrated Wealth, there's me and 28 financial and business experts to help you with your plan and guidance along your journey. So let's talk more about 1031 and when you might do it. So as you think about your 1031, I would not only go to an intermediary, which is like a Sterling Trust or a 1031 specialist, and make sure they specialize in them and you're not the only transaction of the year. A question I would ask one of those intermediaries is how many transactions do they do in a week, in a month? You don't want to be just, oh, we haven't done one in a year or two and go that direction. If they haven't done one within the last 6 months, I'd walk and find another company. A 1031, though, also needs to be highly, highly managed by your tax strategist. And again, if your CPA doesn't know how to do it, we don't call them CPAs, we call them tax strategists because we're looking forward to future planning, future revenues, future purchases of different alternative assets. Most CPAs are historians. They're going to look backward and just, tell you what you might want to do. I would be highly engaged with them because then to the third point, you might just want to sell it and then take your profits and move on to a different asset class. Now, before we continue moving on, I need you to subscribe to the channel. Click that notification button. We're here 5 days a week. So every morning I want that notification to come into your phone and you're here from anywhere from 5, 10, 15 minutes on my longer videos, teaching you some content. If you want to be specific about the category, go to the playlist and just download corporate structure, tax, use of debit cards, credit cards, how to make your kids millionaires in every age possible from their 20s to the 30s to your 40s to your 50s. So there's tons of playlists for everything that you want and really, really consume it. I'd also ask you to share this with at least 10 people. There are so many people who don't know money at all and you need to understand money. Have your kids at 5 years old and up start listening to it. Put this conversation in their background. Their little subconscious minds are developing. And if you want to have literate children, you have to bring them along and have to engage them in the conversation, not at the end of your life on your deathbed say, oh, you're going to inherit all this money, but you don't know what to do with it. Bring them along on the journey is always my advice to you. A few other options that I mentioned, opportunity zones. So opportunity zones for higher net worth families is really, really a strategic move because you can actually push forward the capital gains and tax on that for generations done right. Again, the right tax strategist and estate planning team would help you do that. We have all those teams and they integrate, meaning they talk to each other. Now, a lot of you're walking around our community saying, well, I can go find those individual experts. You can. They're all over the place. The difference is they don't talk to you and there's no one facilitating their engagement with you for your family plan. Now, last thing I want to talk about really quick is the conversion of your home into an entity. And again, I want to read you a few very specific things that you want to look at. Number one, my rule would be, is this going to be an estate property? Meaning, are you going to keep it in your family for generations? Is it a legacy property for you and your family? If you live in your property for 2 of the last 5 years, you can qualify for the primary residence exclusion. You can consider charitable remaining trust for advanced planning. So a lot of people do charitable remaining trusts. So again, across all of this, work with a strategist, work with a tax strategist. Better call our office. I'm going to give you a few things for you to download. I want to give you a copy of our new 2.0 book, Millionaire Maker. Download it and read up to chapter 3, fill out a gap analysis, and then send it to our office, 775-588-9200, or just click on the link, send it through, have a one-on-one appointment about your situation. And even if it's not just a 1031, any money question at any time, you're going to go to askloral.com, ASKLORAL, ask a question, make a request. We have teams who can help you navigate very quickly. The best use of our community is to help you do a few things. Number one, avoid costly errors because we've got thousands of years of experience between all of us and our experts. The other is just to leapfrog ahead of the rest and just get the right answers instead of wander around and getting bad advice and bad answers, spending a lot of money that is going to be useless for you and you're burning your cash. We're going to be back tomorrow with more content. If you have any questions, again, go to askloral.com. If you have any comments on content that you want me to record for you, put it in the comment section below. Talk to you tomorrow.